Reuters.
It is the top performing U.S. fund over the past 12 months. The PBHG Select Equity Fund has a one-year return of 244% and a three-year return of 67.5%. That ought to tell you that the last year is somewhat atypical. The $1.7 billion fund focuses on tech stocks, including Juniper Networks, Siebel Systems, JDS Uniphase. Let's find out what else the hot hand is buying. Joining us from Philadelphia, the portfolio manager of the PBHG Select Equity Fund, Michael Sutton. Hi, Michael. Thanks for being with us.
Thanks for having me, Mark.
How do you value some of the stocks that you buy? Many of these are hard to value.
Well, we really don't look at valuation under traditional metrics, Mark. What we try to do, and what we're doing at Pilgrim Baxter, is buying the companies that we think have the best possibility for top line and bottom line growth, and then the best opportunity for surprises versus Wall Street consensus on the top line and the bottom line. So what we're really looking at is business momentum for these underlying businesses. And we're going out and we're trying to find the best companies based on those metrics.
And while it's going right now, this strategy has in the past led to disastrous results at times, has it not?
Well, Mark, if you look at very short-term periods of time, there's a lot of stock strategies that tend not to work in the short run. But what we're trying to do is that over a long period of time, we think that for the aggressive style that we manage in, that if you give it a long enough period of time, that you're going to get, yes, increased risk, but you're also going to get increased returns. And we think if investors have a long-term time horizon, that they're going to be rewarded for the aggressive style that we manage in.
Okay, so what are some of the things you like right now?
Well, we like Juniper Networks very much, and Juniper is one of the leading internet core routers, and they compete with Cisco Systems, and Cisco is arguably one of the best companies ever. But if you look at how Juniper did versus Cisco in the first quarter, they had 17% of this high-end routing market. At the end of the second quarter, they had 22% of that market. Cisco's market share declined from around 80% to about 75%. So when you can effectively compete against Cisco, you're doing a great job. Also,
well, wait a minute, hold on. 5% of your net assets in Juniper.
That's
right?
Correct.
Okay, are you buying any more at these prices?
Well, this is a concentrated portfolio, and we only own 30 stocks in it. And the idea behind this particular portfolio is to own the best 30 stocks regardless of market capitalization that Pilgrim Baxter can come up with.
Are you buying any more at these prices?
This is a pretty full position. It's actually close to 6% right now, and it's a full position. We love it. We're not cutting back on it. We're retaining our holding in it.
Okay. What are you buying?
There's a number of companies we're buying. We're still buying Siebel Systems, which is another company we like very much. And they're the leading application provider in the customer relationship management field. They compete against companies like Clarify and also Oracle and SAP. But if you look at how, when they compete against these particular companies, 38% of the time, Siebel doesn't see any significant competition. They see Vantif about 7% of the time, Clarify about 6% of the time, and Oracle and SAP about 4% of the time. And when you consider that Oracle just recently came out, I believe Larry Ellison with his typical vibrato has come out and said, hey, we've got Siebel right in our sights. They're really, and they were going to give away some of this CRM software. We really don't see that as a threat.
I'm looking at, I'm trying to figure out what the difference is between these two sheets involving your top 5 holdings.
It could have to do with timing, Mark.
Yeah, I think it is timing. At one point, Nortel Networks was #1.
That's correct, but we've received a large amount of inflows into our fund, as the top-performing fund tends to. And actually what's occurred is companies like, even though Nortel has done exceptionally well, we've had companies like Siebel and Juniper that have gone up fairly exponentially just in the last 6 months.
All right, well, is Nortel still almost 10% of your assets?
What you're looking at is another fund that I run, which is the PBHG Large Cap 20.
Okay, now I see the difference. I'm sorry. This stuff is very, very poorly labeled. Okay, so you are still buying some funds. What's your sell discipline here, Michael?
Well, what we look for is a fall down in any of our metrics. If it doesn't meet our top line growth needs, or it doesn't meet our bottom line growth needs in earnings per share, then we try to look for new and attractive opportunities. If a company loses its business momentum, that's when we sell stock.
Okay. Thank you very much, Michael. Appreciate the insight.
It was my pleasure.
Michael Sutton, portfolio manager, PBHG Select Equity Fund, and you can look at the fund's top holdings on our website, cnbc.com. Still to come on the program, we'll